We have financials and consumer discretionary stocks. Financials, though, kind of in the spotlight today because of what Tim Geithner is saying. Consumer staple stocks, on the other hand, a big drag on the market. Among the stocks moving lower, Procter and Gamble. Bloomberg's Lafley is back with details on some big management changes at this company. A new CEO here on the way. Laura?
Yeah, that's right, Matt. You know, it's an end of an era over at Procter and Gamble. The consumer products giant said today Robert McDonald, currently Chief Operating Officer at P&G, will become the company's new CEO on July 1st. Now, McDonald will succeed Alan Lafley, who's been CEO of Procter & Gamble for the past 9 years. Now, Lafley will remain on as chairman, and investors are really not giving too much reaction to the management change here, with P&G shares down for the session near the lows of the day. Now, profit at P&G fell 4% in its latest quarter as the company really put more emphasis on health and higher cost beauty products, which haven't performed too well given that consumers are scaling back. Now, the timing of this announcement has some analysts shaking their heads also, since companies tend to stick with their current management teams during economic slowdowns to try and avoid disruptions. Linda Weiser, analyst over at Harris & Company, says the change could signal the company's desire to perhaps do a major restructuring, possibly with more job cuts down the road, and we could hear possibly some more details about that when the company reports earnings in August. Matt.
Hey, what does McDonald bring to the table for P&G here?
Well, for one, you know, he's a veteran at the company. He knows this company inside and out. He's worked at P&G since 1980, climbing up the ranks. The 55-year-old West Point grad also spent a decade with P&G in Asia, and analysts say this could be his real strength. Asia is a huge growth area for the company, and McDonald could help position P&G to take on rivals once the recession ends. And keep in mind, analysts say the economic recovery will first start in Asia. So that's their strategy. We'll see if they succeed. Matt.
All right, Laura, thanks very much for that. Now, material stocks are falling today, but one subgroup is bucking that trend. Lydia Thew joins us now to tell us what's going on with steel stocks. Lydia?
That's right, Matt. Well, they are indeed bucking the trend today, and they actually led the materials group higher yesterday. Steel stocks, in particular, U.S. Steel and AK Steel, are rising yet again today, with those two stocks actually both up more than 13% in the past 2 days in what's been kind of a lackluster market. Analysts have been weighing in on the sector, with Keybanc upgrading U.S. Steel and Olympic Steel to buy from hold on expectations prices for flat-rolled products will rise. They did that today. They also maintained Steel Dynamics and AK Steel at a buy as well, though they did downgrade Nucor. Now, Morgan Stanley also upgraded U.S. Steel and AK Steel yesterday. They're expecting steel demand in the U.S. to improve, starting first in the automotive sector and then manufacturing more broadly. So that's been the trend, with analysts really raising their expectations for these stocks, which have rebounded this year, but they're still really way off their peaks, Matt.
All right, Lydia, thanks very much.